All right. Hey, everyone. Welcome back. Today is Wednesday, and we will be now looking at the Nasdaq Futures, the Micro Nasdaq Futures, MNQ, to see if we could find any trades using the Trade Scanner Pro. So I'm going to demonstrate in this stream the steps to do that. If you'd like to try out the Trade Scanner Pro, you could see the link here on the screen. There's a 14-day free trial. All right, so we're going to get into that. Now, so real quick before I get into that, just quick update on Bitcoin here. Right, the analysis that I wrote on on Sunday tried to break out and it's failing. See what I mean? So again, there's no guarantee you're going to get a scenario like this that I drew on the chart, this wave 5. But this also could be the very beginning of it. It's just hard to tell, right? Does this candle close below the range, the consolidation, or does it stop around here somewhere and reverse? Right now, look, looks like a double bottom situation developing, right? It's not confirmed yet, but it's possible at this point. Anyway, just want to point that out. This could be basically the 1 and the 2, and 3 could be next on this thing, right? For this sub wave 5. Just want to mention that. That's where wave counts can be very helpful in mapping out what's likely in front of you. Now, if this thing breaks below this range low over here, then it cancels out the whole idea. That's the way you have to use that. All right, anyway, let's switch over to the MNQ. So MNQ1, all right. And that's the daily time frame. And then we're gonna switch this over here, MNQ1. Now, when using Trade Scanner Pro, you have to know the time frame that you want to work within. You have to be very familiar with that before you use the Trade Scanner Pro. You can't be jumping around and saying, okay, I'm going to check this time frame, I'm going to check that time frame. I'm going to turn these off because we don't need the moving averages. So for this stream, for the purposes of this stream, as I do every week, I know in advance that I'm using the 1 minute time frame and the 30-second time frame. I know this in advance. That's where I'm looking for trades. So I'm not going to jump around to the 5 minute or the 30 minute or anything like that. There's nothing wrong with those time frames. You just have to know in advance that that's the time frame that you're interested in looking for trades on. Right? So something like a 30-minute time frame would be more appropriate for swing trades. Now, so the first step that we do here using the Trade Scanner Pro, the first step is we have to identify the trend levels, right? So the first thing that I do is I look at a daily time frame and I zoom in like this. This is a daily time frame of MNQ, and I'm only interested in support and resistance levels on this time frame. I'm not interested in anything else. I don't care about the longer term trend. That's not going to matter when we're dealing with 30-second and 1 minute time frames. So that's yesterday's low. I'm interested. That's today's low, the overnight low. All right. That's today's overnight high. This is yesterday's high over here, up here. That's it. That's all I'm interested in. So that gives me right there a sense of support and resistance levels. These are levels that I can anticipate some type of price behavior in advance, right? All right, so that's it. I don't have to look at this time frame anymore. I can now go to a 60-minute time frame. The 60-minute time frame, as we could see now the levels that I drew from the overnight high and overnight low and yesterday's support and resistance, right? The 60-minute time frame or hourly gives me a sense of momentum. This is important for the Trade Scanner Pro because the Trade Scanner Pro is a confirmation tool that looks to confirm momentum. And if we get this wrong, we lose money, right? Number one. Number two, another area that's tough with this is if the momentum changes while we're in the middle of a trade. So, for example, right now, this momentum looks pretty clear. Bearish, I'd say, right? I mean, look what's happening here. You have lower highs. It's coming off of a lower high. That's the overnight high. It happens to be a lower high, right? Yesterday produced a lower high. That was the open yesterday. This large candle was yesterday's open pretty much, right? And we have the peak up here. So I see lower highs and lower lows, okay? And right now we have a lower high in progress. It's trying to produce the lower low. So I'm going to assess that the momentum is bearish. Okay, does that make sense? If the momentum is bearish, then I'm going to be looking for shorts on my 1 minute and on my 30-second time frame. Now, if this changes in the process, and for example, it finds a double bottom or something around here and becomes bullish, I'm going to have a hard time, right? That's important to understand. So I'm going to go with bearish based on this price action right here, right? So with that being said, we're going to now switch to the 30-second time frame on this chart. And on this chart, I'm going to switch to the 1 minute time frame, right? On this chart here, I'm going to turn the Trade Scanner Pro on because it's off. And when you have the Trade Scanner Pro, you have to make sure that you turn these check boxes on. The trailing stop, the show previous trade, and the heads up. We're going to leave counter trend alone for now because I'm not looking for counter trend trades. That's more advanced. I have videos about that, and I'll be making more videos about it. All right. So we're going into the support level. We're looking for shorts. I want to check my trend status, especially on a 30-second time frame. This is very important. You got to keep a close eye on this trend status because it changes constantly on this time frame. On larger time frames, you're not going to have that problem so much. But on a 30-second, it changes a lot. 1 minute it's bearish, then it could be bullish, then it could be bearish. That tells you what type of trades the Trade Scanner Pro is looking for. So it says trend is bearish. That means it's going to be producing short signals. That's what that means. And that's what I want. It's in line with my analysis. Remember, you do your analysis first. Then you look for the Trade Scanner Pro to confirm your idea, not the other way around. I get people, they send me messages. They're like, oh, I'm testing your thing. And I'm like, dude, I'm telling you right now, watch the videos before you start testing because people assume that they know how it works. Or they assume, and it's not intuitive. You have to, for one, do analysis first. For two, you have to use this thing as a confirmation tool. It does not forecast trades. Most of the time, I would say it'll call random trades. If you're just taking them randomly, if you're pulling up a 5-minute chart, you see a signal there, and you think that's a signal, it's most likely random, right? So anyway, so here we are. We're sitting at a support. I'm looking for shorts. Now, this is a 30-second time frame. If this market is going to be moving like this, I'm most likely not going to see a signal anytime soon. How long has it been since I've seen a signal? 82 bars, about 40 minutes it's been since I've seen any type of signal. 40 minutes on a 30-second time frame. So I may have to go to a 15-second to see if I'm going to get anything. See, now look, on the 15-second time frame, there was a signal right here, which was 34 bars ago. So that's 15 minutes times 15 seconds times 34 bars. So what is that? I don't even know what that is, but that's going to be less than 40 minutes. I'm willing to guess that's about 20 minutes, something like that, right? That's a little more reasonable. So I don't like to trade 15-second time frames. They're usually too erratic. But in certain markets, you don't have much of a choice if you're trying to work with these smaller time frames. Plus, I'm doing this on a stream. So I need to get signals, right? Otherwise, we'll sit here for hours, and I'm not going to stream for hours. It means these signals that I take sometimes can be much lower quality. Now, speaking of that, let's go over to my my trade setup here, right? I'm set up for 2 contracts. So, all right, I could start with 2. And then I'll just add, I'm trying to trade with more aggressive size because I need to get somewhere with this account soon. Also, here's another announcement I'd like to make with this. I mean, I'm week 3 of July. I'm not really making any progress with this account. Plus, people don't even show up to this stream. So I don't even know why I do it. So what I'm going to do is I'm going to take next week off on Wednesday because there's really no point in doing this stream. On Monday, I'm going to do my Monday stream as usual. But Wednesday, I'm going to take off. And then August, as I mentioned previously on Monday, August is, if you're going to take time off from the markets, August is the best month to take off because the volume, the seasonal volume is at its lowest. So since we depend on momentum here, that's usually the worst time to look for these type of trades. right? So I'll probably take the whole month off for the Wednesday stream, most likely, or maybe I'll do every other week. I'll figure that out because there's no point. I could be doing way more productive things at this time than talking to myself like I'm doing right now. So most likely, I'll remind guys on Monday anyway. But most likely, I'm going to take next week off, and I'll probably take most likely the whole month off as far as these day trade streams. There's no point. I'm not making any progress, and I might as well, there's two choices for this account: reach the profit objective or blow the account, right? And to do that, I'm probably going to have to trade mini lots because I'm on micro lots still. I'm still trying to be conservative somewhat, right? So this is an Apex account. By the way, I am now an Apex affiliate. This is a recent thing. I've been using Apex before I was an affiliate. So obviously I like them because they're inexpensive generally. Like right now they still have their 80% deal, I believe. You just go to their website. You don't need my coupon code. You could just get the 80% savings on their evals. But if you use my coupon code, I get a small cut, which helps to support my channel and also encourages me to continue to stream because I'm looking for, other alternatives here because this clearly doing this now for a number of months and I have to cut back on it because it just doesn't, it goes backwards. My numbers go backwards, not forwards. Some people say, oh, you're not giving it a chance. Well, I'm not, I need to do other things to cultivate enough of a following to build these streams. Streaming itself doesn't build a stream. Okay, here we go. We got a signal to go short, right? On the 15-second. Now, as you guys know, I don't take the initial signal. So, and there'll be times I may miss, trade may turn out well and may go straight to the profit objective, right? Which I'm going to miss. That's okay. I'm using this setup here as my heads up. This is, again, not something you're going to learn from using. It's going straight there. All right, whatever. That's okay. That's part of the deal here, right? I don't mind missing this because the way I'm using this trade suggestion right here is I want to see the order suggestions appear like they have. Okay, I want to see that. That's the first step. The second step is I want to see a retest of the blue line. A retest of the blue line. See how it's trying to pop back up? Or a retest of this area right here, which is the risk gap. See, there you go. That's what I'm talking about. Okay, that's why you don't chase it. Now I'm looking to get short. Let's see if we get a red candle here or something. We got a retest of the blue line. I like to see that. All right. Maybe what I'll do is I'll do one contract at a time here. Not 21, one. Okay. And I'll start shorting one at a time. Right? So here, I'm going to start with one over here. I got one. As you could see the order pop up here in my chart. That's just one contract. Right? Now, again, I waited for the retest of the blue line. We got a red candle. Now, if this thing pops up and goes straight to the stop, which is up here, I bang it out. I only have one. But you see, if it starts going my way, I can add to it. Right? So let's see what kind of candles we get here. But that's why I wait. And by the way, this is a 15-second time frame. It can be highly erratic. And that's why I don't really like to trade these time frames. See what I mean? That's why I only have one. If it goes straight to the stop, I bang out of one and I lose on one contract. It's no big deal. But if I have other opportunities to add like this, okay, I'm going to add. All right, so now I have two. I'm going to try to build up to five. If I could build up to 3, 4, or 5, 5 contracts, that would be ideal. Again, these are micro lots. All right. Now, if we can continue to get some more red candles here like that, okay, I'm going to try to add another one. All right, so I got 3. All right, I think I'll stick with 3 for now. You could see the number. You could see it over here on the little order thing over here. 3 contracts, right, on the 1-minute chart. You see it over here. Now, if this still may stop out on me, all right, and so I have to prepare for that. I'm going to load this up with 3. So if I'm wrong, I have to bang it out and lose on 3. I'm being more aggressive with the size because I need to make progress with this account. Okay. Or not. Like I need to either, because I spend $30 a month on this account for nothing. So it's an evaluation account from Apex. And the goal is to try to reach the profit objective using the Trade Scanner Pro. But I don't trade this account every day. I only trade it on stream. So at this point, I only trade this account once a week. So it's going to be a very, very, very slow progression. Okay, unless I trade big size and do highly risky things, right? But when you're dealing with eval accounts, that's the whole idea. But you still need a sustainable strategy so that when you get to the payout phase, you can actually get payouts, right? You can't trade super aggressively on that phase. I mean, you can, but chances of blowing the account are very high, and you're just wasting your money. Because the thing is, with the payout phase, that's where Apex is tricky, right? Every prop firm has its own pros and cons. The pros for Apex is they're cheap, but there's a strategy behind that for them. They suck you in, right, with the cheap evals. Okay, cool, that makes sense, but it's a good way to build confidence and build your system and build, and practice, right? And with potential payout, and it doesn't cost you a ton of money. That's great. But the way they get you is the activation fee. And once you pay that activation fee for the payout phase, it could be $140 or it could be $85, right? People will say, well, why would you pay $140 if you could pay $85? Because $85 is monthly. $140 is a one-time payment. So a lot of people will pay the $140, which is a mistake if you don't have a sustainable system, right? You're better off paying the $85 because you're going to blow the account anyway, right? Basically, the chances of blowing the account are high. So you might as well do the $85 a month version because you're not going to be paying for long, right? So when you pay that $140, whatever, now that's really your real cost of the eval. Because the reason why that's important to know is when you pay that $140 and you blow that account, you can't reset that account. You have to start over, right? So now $140 is at stake, and in order to request a payout, you need to basically beat the eval again. You need to reach, instead of $3,000 on a 50K account, you need to reach $2,600, which is essentially the same thing, just a couple of $100 short, right? It's the same thing. So you have to beat the eval 2 times. Ooh, look at that. All right, time to get out. Time to get out. Time to get, oh man, come on. That's what I want to see. What time is it? It's 10 o'clock. It's not even 10 o'clock. All right, I'm going to cover one. I'm not even up that much money. I thought maybe I'd be up like, a couple of $100 there. I'm not even up $100. But this is a 15-second time frame. So the move looks a lot more dramatic than it is. But it went to the profit objective. So this is a great example of how I used the technique to build the position into the trade without rushing into the trade, right? I used the filtering technique. That's what allowed me to get into this and build the position. All right, so I'll review that here in a moment, but I'm going to start covering this. If we could go a little lower, I'm trying to hold on here. As you can see, the trailing stop is now in effect, right? This yellow line up here that's starting to follow the trade. If this trade continues in my favor, if it keeps in my favor, the trailing stop will begin to follow it. It's not continuing. We're getting green here. That's the thing. It's very erratic. Okay, it's very erratic. Now the 1 minute, the 1 minute over here is showing a higher low developing. Right, that's not a good sign. It's a failed low on this time frame here. That's not a good sign. That's not exactly bearish. Something that's bearish, for one, should be pushing lows. We're going into the 10 o'clock candle here. There may be news here. I know there was an S&P PMI number, manufacturing PMI. I don't know if that was today or if it's tomorrow. Might be tomorrow. And that might be a 10 o'clock number. I don't know. So this thing, like, it's not progressing yet. The trailing stop has now cut my risk in half, but if the price goes back up here, I'm losing money anyway. All right, so I only have 2 contracts. I'm trying to give this thing a chance to see if it can follow through and give us another leg lower. But man, this market, like, this is what I mean. When you have bearish movement like this is nonsense. Like, excuse me, this should be following through. That's what a bearish market does. That's what bearish momentum does. It follows through, right? Usually when people are selling, they don't wait around, right? You get moves that look like this, right? They're usually very dramatic. That is what I should be seeing here, especially after a large bearish exaggerated candle like this one. Okay, this thing should be pushing, but instead notice we touch the support and we reject it, right? That line that I drew there earlier, that is a valid support. Now, theoretically, in this environment, that support should break. But clearly, there's some support. Look, it bounced off of here initially. That's where we got the number from, right? The overnight low or whatever it is. So clearly, there's buying activity there. Now, maybe we retest it again and break below it. I'm prepared to cover more here. We're beyond the profit objective a bit. Okay, I like to see that. All right. Okay, keep it going. Keep it going. But they won't keep it going for long, right? Because they know I'm short. And they love to make me look bad. All right, there we go. All right. There we go. There's a little progress. All right, I'm covering another one. Not gonna overdo it here. My trailing stop is now at break even, basically. Okay, if I'm now, it just went beyond the blue line there. I only have one left. Okay, so now I'm going to try to let it ride a bit. But again, this is a great example of how I used the filtering method to take this trade. Okay, I can't emphasize that enough. It's not the filtering method that's making the money here. It's the momentum. I was aligned on the right side, right? But the filtering method helps me avoid these noisy trades. Now, it doesn't work all the time. You've seen me get stopped out using the filtering method also. But the idea behind the filtering method is you start with one contract, and if it starts to continue your way, you add to it. If it doesn't continue your way, you get stopped out with one contract, right? And the loss is minimized. When you win a lot, right? On the previous Wednesday, I had a couple of losing trades, right? I lost like 200 and something dollars. I don't know if I'm making all that back here, but I made a decent portion of it back, right? Now, as you can see, this thing is fighting here. It's fighting. It shouldn't be doing this. Like a weak market should not be doing this. Now, looking at my 1 minute time frame over here, I mean, look what's happening. This is basically like a failed low, double bottom situation. The market's very reluctant here. Is it 10 o'clock yet? Yes, it's 10 o'clock. All right, so that's the 10 o'clock number. If there's a number, or 10 o'clock is a significant timestamp for the Nasdaq, or basically the market in general, right? It establishes the initial range or the opening range, which is a market profile thing. Okay, you can Google that, opening range. And then the 1030 candle is what they call the initial balance or whatever. Right? So that just defines a range. And then that range can help you gauge trend. Right? So for example, we could switch this to a 30-minute time frame over here. Right? That's where you'll notice this. So this 30-minute candle, the first 30-minute candle, that's the opening range. This right here, that's the opening range. If we stay below the opening range, then it's reasonable to anticipate the market to stay bearish. Now, a lot of times it'll find support at that opening range low, like it's trying to do right now, in reverse and go back inside the range. That's a common thing. But if it like breaks below, like if it can break this low over here and it keeps going, then chances are you want to stay on the short side, okay, and not look for longs. When you're inside the range, you could basically work on longs and shorts, basically, right? Because you're more in like a consolidating type of market. And if you break above the opening range and stay above it, it's more reasonable to look for longs. Now, keep in mind, I'm not using the opening range to take positions. I'm using it to help me judge what side to work on. And the Trade Scanner Pro confirms the trade ideas, right? It gives me the heads up, like these order suggestions here. I use that as the heads up, and then I navigate around that to build the position. This is even more important when you're working on larger time frames. I'm doing this here on a 15-second time frame, which is an enormous pain. This is a little more easier to implement when you're dealing with like a 5-minute time frame or a 15-minute time frame, which is what I recommend for beginners to begin with, right? Because the signal may appear, and then now you have plenty of time to wait for this thing to give you confirmations, meaning it's giving you candles on the side of your trade, right? In this case, with short. So imagine if this was a 15-minute time frame, and these were 15-minute candles that we were waiting for them to close, right? And then you add to your position based on that. Of course, you're going to have to monitor the trade the entire day, but that's within reason, especially if you build a small position, you don't have to worry too much about it. Your stop is defined, your profit objective is defined, and you don't have to sit in front of a computer all day. Plus, with TradingView, you can actually set up a notification thing. Here, if you right click, you set up this notification thing, and it'll tell you when a heads up, like these red column or green columns appear. It'll tell you when that appears, and it'll tell you when a signal appears, right? Or if a stop loss or a trailing stop is touched. So you can get these notifications by text or by email, however TradingView handles it, and you tell TradingView how you want to receive that, and you don't have to be in front of your computer all day long, right? What I'm showing here are extreme examples using 15-second, 30-second time frames. Now, when I started the stream, I said I only work on 15-second, 30-second, or 1 minute. But in this case, I switched to a 15-second. Occasionally, I have to do that because I can recognize the type of price action. And if the market's going to be a certain way, it'll take forever to get a signal. Like, for example, I'm going to switch this over here to a 30-second. We never got a signal on the 30-second. Look at that. There's no signal there, okay? So I'd still be waiting. For a signal. Meanwhile, I have a nice trade running, and I'm still in the runner because I went to a 15-second time frame, right? 15-second time frame is going to give more frequent signals, but they're also going to be much noisier and more erratic and harder to deal with. That's why I don't encourage 15-second time frames. But if you're more advanced, so you could follow along. You see what I'm doing here. Now, look, again, we failed to break that low. This thing is a pain, right? We're beyond the profit objective, but this market won't break. All right, you know what? I'm getting out. I'm done. So let's see how much money I made altogether here. Not a whole lot of money. $153. All right. So that puts me back in the green on this account. But as you could see, now imagine if I had done that with mini lots, right? If I had 3 mini lots on, that would be like over $1,000, right? That's what I need to do in order to beat this account. I need to do that. Of course, they always do this to me. They get me out and I miss out. Whatever. It's still profitable. I don't care. But so to recap that trade, okay, we can make this chart bigger since the trade occurred on this time frame, right? I switched to a 15-second. We got the signal, which are the order suggestions. I told you I wasn't going to jump in on the signal itself because I'm using the filtering method. Why? This market, the momentum is generally slower, so it's a lot harder. You get a lot more noise. Okay. In E-mini, well, right, well, no, so Lafta, 1.5K, right, if I was on mints, right. That's excellent. I had three micro lots on. So imagine if I had put on 3 mini lots, I would have made 10 times probably what I made there, right? Which is around $1,500, which is halfway to the profit objective. The profit objective is $3,000, right? But if I was wrong, I would have blown $1,000 or more. Very possible. So that's the thing. You can't be wrong. And there's, with the Trade Scanner Pro, people have seen me take losing trades frequently. I take losing trades. I mean, the week before I had a bunch of bad trades, right? Because the market was kind of like this, just not cooperating. It's not the signal that made me the money here. What made me the money is how I made my decisions around the suggestion, right? So the orders that you see on the screen here, that's the order suggestions from the Trade Scanner Pro. That's the confirmation, right? Now, but instead of jumping in on the blue line, which is what you would do in a high momentum market, like we were doing a few months ago, I have what I call the filtering method. And the filtering method is simply wait until you retest the blue line and get some sort of candle confirmations going the way of the trade. So in this case, you saw me do this. I waited until we got red candles up here. I started my position. We popped up inside the risk gap. I got another red candle. I put on more. We went back below the blue line. I put on more, right? So I had 3 ads. Then we had this dramatic candle situation. I started covering. I started to get out, right? We had this. You saw me get out of more, right? And then I tried to hold on to my runner and I got out over here, which, look, I would have gotten out there anyway. My trailing stop. Now, if I was just going to use the trailing stop, I'd be getting out just about now. Actually, I exited at a slightly better price. Remember, the trailing stop is there to try to help you hold on to the winner longer. But in markets like that we have right now that are highly erratic and very slow, you're better off just taking your profit, right? We don't get those really sustained, 200 or 300 point moves. We just don't get those in this type of environment. So you're better off just trying to maximize whatever you can. If you want to give the trailing stop a chance, you could try, but you're probably going to give it back a bunch of profit. Now look at this. It almost touched the trailing stop and it rejected it. Nice, right? So if you were still in the trade, if you were not going to be sensitive to it at all and just be like, all right, either we touch the trailing stop or not, this trade is still active. When this trailing stop is touched, the order suggestion will vanish and the trade will be complete, right? That's how the Trade Scanner Pro works. So, again, I don't recommend using this on a 15-second time frame. I recommend for a beginner using this on a 5-minute or a 15-minute or something like that, where it doesn't change every 2 seconds, right? This is highly erratic and very hard to trade. Sometimes I make it look easy because it happens to work out, but not all the trades work out like this. But again, what protects me in this situation is the fact that if I was wrong here, if I shorted it here initially like I had, and this green candle went straight to the stop, which was very possible, I would lose on 1 contract, not 3, because I only had 1, right? But I win on 3. And the idea is to win on more. So you lose on 1 and you win on more. Right now, if I was more aggressive, like I said, I would be doing that with mini lots. So at some point, I'm going to have to start throwing around mini lots on this account because I'm not getting anywhere with this account. In order for me to get somewhere significant with this account, I have to throw on the size. Okay. Now I hesitate to do that because this environment is so lousy in general that, this is really not the environment to be ultra aggressive. But again, ultra aggressive, why? Because this is theoretically not a $50,000 account. I mean, if you look at the Apex information, right, it says that it's a $50,000 account, but that's not true. That's just numbers that they put in your face. The reality is it's a $2,500 account. That's what it really is, because that's where the max loss limit is, $2,500. So if I'm putting on mini lots and I lose $2,500, which is very easy to lose, I blow the account. So in reality, a 50K account is a $2,500 account. Look at this making new lows. Look at that. Let's go back to our 1 minute. Look, notice there is no signal on the 1 minute time frame. Okay, so all of this price action, I would be missing out. I would have made nothing. I'd be sitting here talking the whole time with no trade signal. Right? But I knew to watch, I have to watch and monitor a smaller time frame. It's usually the 30-second, but in this case, I had to go to a 15-second because I recognize the price behavior. That comes with experience. I don't expect you to know how to do that. So that's why, again, to start out, you keep it simple. Work with a 5-minute time frame. Use the notifications on TradingView to tell you when something pops up, so you're not sitting in front of your chart for hours waiting, because that's ridiculous. How does ES compare to NQ? ES is even slower. Okay, I look at the NQ because NQ is where the action is. It's more comparable to something like Bitcoin. ES is like, it's like this is like a Formula One car and the ES is like a Honda. All right, like ES is horrendous. It's good for size. Like if you want to throw around 100 contracts, like mini lots, ES is that's what it's for. It's thicker. They're going to move in a similar way. It's just ES is slower. So for example, if Nasdaq moves 100 points, right, ES most likely moved like 10 points or something like that. So it's that's the way it is. ES tends to range more where Nasdaq tends to trend more because the moves are more dramatic, right? Well, just think about each index. The S&P 500 is 500 stocks. It's based on 500 stocks. The Nasdaq 100 is based on 100 stocks, 100 of the more wild stocks to begin with. So that's why, if for movement purposes, the Nasdaq is the place to look. But if you want slow, you go to the ES. You could use the Trade Scanner Pro with the ES. You just have to adjust to that personality type. It's slower. All right. Then you also have the Russell 2000. I never really was a big fan of that thing. It's just very, I don't know. I don't even know how to describe it. That's why I don't look at it much. Then you have like the YM, the Dow, which is 30 stocks. I don't look at that market either. But those are your choices with these things. You could look at oil. You could look at gold. Especially gold has been in play in recent times. And I used to mess around with gold, on these prop accounts. But gold is a little less flexible. It's less liquid. So if you're wrong on gold, you're losing a ton. If you're right, you're winning a ton, right? So that's why the Nasdaq and the S&P are more liquid. The spreads are better. It's easier to get in and out of, especially if you're going to be throwing around larger positions, which is the whole point of having a prop firm account. The whole point is to throw around size, which is something you can't do in a real account, because like just margin wise, if you had a real Nasdaq futures account with a broker like Interactive Brokers or whatever, the typical margin for one micro lot is like $3,000. That's the money that you have to have in your account to trade one micro lot, which means you can't even trade two micro lots. To trade a mini lot, you need to have 30 grand in your account. Something like that you need to have in your account to trade, to have the margin to maintain just one. So that doesn't make sense. Most people can't do that, right? That's why you use prop firms. Now, there are some brokers out there that'll have day trade margin. So as long as you don't hold overnight, they'll extend the margin, and you can trade like, a bunch of mini lots or micro lots with a smaller account, like a $5,000 account or a $3,000 account. They'll charge you like, or they'll require like $500 per contract day trade margin. That means that if you hold overnight, that's where they're going to punish you, right? You can't hold those overnight. So anyway, those are more complicated. It's easier, just work with a prop firm. And that's where you can practice with size. And the other great advantage to prop firms is if you make mistakes, you don't have to be afraid of losing thousands and thousands of dollars like you have to be when you trade with a real account. With a prop firm account, like this account here, right? It's not a 50K account. Like I said, it's a $2,500 account. If I had two mini lots or three mini lots and I'm wrong, and this thing goes 30, 40, 50 points against me, and I blow $1,500 or $2,000 in minutes, I don't have to be depressed for the whole day, because I'm like, all right, how much am I really blowing here? The cost of the account, which is, $30. If it's really on sale, a 90% sale, I'm blowing $16. Like, come on, that's the cost of a freaking sandwich with inflation these days, right? So that that allows you to trade size with confidence. And if you're wrong, you're like, all right, I just blew $16. I'll just close this one and start another one. That's the advantage, because you can test your strategy, build your confidence, make mistakes with size, and not have to sell your house as a result. Look, we got another signal here, right? Now, I'm not going to take this because I'm up. But again, you would treat this the same way. This is your heads up. You don't jump into this. As a reminder, this is a heads up. So with this heads up, what you want to see next is a retest of the blue line or a retest of this area here. That's how I managed the previous trade. Now, using that method, again, there are going to be times where it just goes straight to the profit objective, right? Like this may go in a straight line to the profit objective. That happens, but that's meant for a high momentum market. What's going to happen more times than not is it's going to reverse somewhere in between and retest this blue line. And a lot of times stop out, that's what you're trying to avoid. See what I mean? See what that green? See what I mean? See what I mean? So it hasn't retested the blue line yet, but that's the action you're waiting for to take a trade, right? And you want to see the blue line get retested, get touched, and then red candles produced after that to go short. Or even better, it goes beyond the blue line and then gives you a reversal pattern, just like before, right? Just like the trades I took up here. Same idea, right? Now, again, there'll be times when it just goes in a straight line. You're going to miss those, but that's okay, because there are also going to be many times where you would have been stopped out, and you're going to miss out on those stop outs as well. That's the whole idea. See, look, it's going straight to the profit objective. All right, again, this is a 15-second time frame, so it's going to be more dramatic and more erratic. Let's just go to a 30-second. Is there anything on a 30-second? Nothing on a 30-second. That's the second signal. The first signal I took was up here, okay? The second signal is over here. You can see the heads up there. I'm getting no signals on the 30-second time frame. So I knew to at least be on the 15-second because that's where the action is. How do I know that? Because I recognize this price action is generally slower. Okay, generally it's slower. The Nasdaq on a normal day during normal seasonal volume, like in the middle of like November or December, the Nasdaq blows 100 points in like 5 minutes or something like that. I mean, in April, we were looking at 150 points a minute, right? That's more than Nasdaq. That's momentum, not this nonsense where it struggles. Like, what's it doing here? Let's see, 20 points. It's like struggling. Like 20 points is like a big move. 30 points is a big move. Those aren't big moves for the Nasdaq. So you're able to get that perspective with experience. When you've seen when the Nasdaq is its true self, that's when it's wild. Okay, and in this environment that we're in right now, typically, look at this. See how it's turning? Let's go back to the 15 seconds so we can monitor that. So guys, again, if you want to work with the Trade Scanner Pro, you know, I'm demonstrating. You can go back and watch my previous streams. I'm planning to repurpose my earlier streams where I show these trade examples, so you don't have to watch an hour of me talking a lot of nonsense. We just cut right to the trade. I'm planning to do that to really make that information more valuable. But the point is, these streams are to serve as an educational session so you could learn to use this tool properly, right? And people don't care. No one watches me anyway. But you saw me make a decent trade there, okay? And I'm showing you how to use this tool, which you're not going to learn on your own. And I'm teaching this for free, right? This is really valuable information on how to trade and how to use this tool in particular, right? And how it keeps you out of trouble if you use it properly. If you don't use it properly, you're going to lose money all over the place, right? But you can try this out for 14 days for free. You see the link up on the screen. And I encourage you to give it a try, right? And I encourage you to try it on larger time frames. Here is the retest of the blue line, right? You see, if you just wait, there it is. Now, this is where I would be looking to take the first trade right here. Red candle close, try first one, right? That's where I would take my initial trade. I'm not going to do that here because I made a little money, right? I have a green trade. I like to finish green because this can easily stop. But that would be the initial trade. Now, if I was going to be highly aggressive, like I'd have one contract there, right? A micro lot. Now, if I was going to be more aggressive, I'm looking to add, right? In this situation, I'm going to ignore the trailing stop because the trailing stop is pretty advanced here, and this would stop out pretty quickly, right? It can easily touch that. So I'd be looking for another red candle confirmation. And now, if I was really aggressive, I would add 5 micro lots to have a total of 6. Something like that would be very aggressive. Excuse me. We're getting these red columns because that's another form of heads up. That was the initial heads up. Okay, that's what I was using before. I was using the order suggestions to take the trade. The order suggestions, you could basically call them like a second level of heads up. Right? Now, if we get another reversal, kind of red candle or pin bar or something, that's when I would add, right? I'm not going to add on these green candles. Does that make sense? See, something like this. If you get like a bearish engulfing, something like that, a red candle close, add, right? And then look at the next candle is green again. Like, that's not cool. But if you get another red, or if you get like a break below like this low over here, that would be another justification to add, right? If I was super aggressive, I'd have one mini lot on, and then I'd be looking to add a second mini lot. This could be my second mini lot right here, right? See how that works? That's what you wait for. And if this was a 5-minute chart or a 15-minute chart, it's the same idea. It's just you're waiting a lot longer. Each candle takes, 15 minutes to close, not 15 seconds, right? Look at that. Imagine if those were 15-minute candles. Of course, 15-minute candles are going to be much wider in range. They're not going to be like, 5 points. They're going to be like 30, 40, 50 points on a 15-minute candle, typically. Something like that. Make sense? All right, guys. So any questions? You can see this thing's fluctuating around a bit. This thing may stop out. Look what's happening on my 1 minute, right? What's happening here? This trend is generally bearish, right? But we're not making a lot of progress. Look at all this overlap. And why do we have this bullish candle situation over here? What is this? That's not the characteristics of a bearish market. This market may be changing. That's what I don't like about these slow markets is they change. So if I'm sitting here calling this bearish, 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 and it's changing, I need to recognize that, because if I keep taking these signals, I'm just going to lose money all over the place. See, look, that touched the trailing stop, the trade vanished, right? Now, I could turn that trailing stop off so that the trade would still be on the chart, but the original stop was up somewhere. It's likely to touch that stop, see? That's why it's like when I have a winning trade, I'm done. Like I don't continue. I would be giving all my money back here, right? I'd be giving it all back. Maybe another signal develops here, but you understand my point. Now, this price action, while theoretically this should be bearish, we're having conflict here. Higher low. Why am I seeing a higher low in a market that's generally bearish, right? We have this resistance area right here. We're trying to break above it. We haven't broken above it yet. We're trying to. So this maybe would be one more short attempt. Look at that. Right? One more short attempt. There's another signal. Okay. Now, again, if you were going to trade this, you treat it the same way. You don't take this initial signal. You use this as a heads up. Okay. Heads up. So now what you're waiting for is maybe we get some sort of retest of this area here like it's doing. Perfect. I want to see that, and maybe some reversal candles, or we go below that blue line and then we retest it. Another thing, if we touch the blue line again, like something like bearish pin bar, right? Something like that. We touch that blue line again, that justifies opening a position. That's how you use it. Imagine, again, these are 5-minute candles. See, look, that would be the entry right there. Okay. Now look, this is our first 1-minute signal. Look, it appears concurrently. Our first 1-minute signal. It took what? Almost an hour for this signal to pop up on my chart. Now, that doesn't necessarily mean that this trade has a higher probability. It just means that that's great that it gives you some more risk and reward reference points, right? You could use this profit objective and this risk as reference points. You can also use this to add as well. Like if you start getting the confirmation candles going back below the blue line, you can use that to add as well. All right. Especially if this 15-second one gets stopped out. But you see, look, so if I put on one, I'd be looking to add more here. Okay. If we get the red like here, red confirmation, maybe add, if I get the red candle continuation, we got the pin bar, but I want to see some red candle close, something bearish, especially if this turns into a lower high. Okay. Now, let's say I'm not taking, as you can see, I'm not taking any trades here, but imagine if I was, and I'm losing money right now. Okay. I'm about to get stopped out again. I may have the opportunity to add. I may get stopped out. This may be an opportunity to add here. But let's say it gets stopped out and this 1 minute gets stopped out. Okay. That is not characteristic of a bearish market, which means I'm probably fighting. The market's probably changing. Now, it doesn't mean I start rushing in and going bullish and start buying everything. It just means that the market is changing and I should probably stop and avoid until the new trend becomes clear, right? How do I know? Well, I could use the trend status for that. See how it says trend is still bearish? I should wait until it says trend is bullish. When trend is bullish, I simply wait for long signals and start the whole process all over again. That requires a lot of patience. But that's what you have to do if you're going to sit here for 8 hours and do this. I don't like to sit here and do this for 8 hours. I think it's ridiculous. To sit here for 8 hours to lose $100. Like, that's just ridiculous, right? So that's why you want to be as efficient as possible. Use the TradingView notifications. Wait for notifications to come to your email. Do not sit in front of your computer. It's a waste of time. Do other things. Go outside. So again, see how it's trying to stop out? It's probably going to stop out. Okay, no problem. I'm not in it, so that's why I'm staying out. But as you can see, even with the filtering method, I may have had 2 contracts on there because there may be 2 opportunities to add, and it stopped out. The 1 minute is still in play. You could use the 1 minute as a, say, okay, I'll use that stop instead. Maybe use that as an opportunity to add. But like I said, if the 1 minute gets stopped out, then this structure, like, we're getting a change here. This is not characteristic of a bearish environment. So that's a sign that maybe it's just time to walk away and stop. Right? This session is over. Because as we get, after it's 10:30 right now, right? After 10:30, especially in the middle of the summer, volume dries up. Right? You have to understand the volume patterns of the market. 9:30 to 10 o'clock is the best time for momentum. The market open, the Nasdaq market open. That's when you're gonna see moves. Like yesterday and the day before, we had moves like that. 9:30, massive move. After that, party's over. And if you continue to trade in that lousy environment, you're just asking for trouble. Right? It's harder. A lot of times, it's not worth the trouble. The next window of opportunity is usually in the afternoon, 2:30 to 4 o'clock. But in the summertime, it's not as good. And this gets worse in August. It's just, I'm not being pessimistic. That's just the pattern of volume. Volume dries up. We're in a low volume environment to begin with. And then you have low volume environments within the low volume environments. That's what this is. Look, the 1 minute is still active. Look at that. Look at that. Okay, so look at that. This is what we should be seeing in a bearish environment. Break of these supports. Okay, that's what we should be seeing. So if you manage to hold on to that using the 1 minute as a stop, the trade is working. If you're using the 15-second, you got stopped out. That's why I don't like the 15-second time frame. It's too erratic. Okay, it works sometimes, but it's very erratic. This thing stopped out like 2 times. Okay, meanwhile, the 1 minute just gave us our first heads up, and it took 45 minutes or longer to see that, right? So it's a trade-off. If you want more signals, they're going to be less reliable. If you want less signals but a little more reliability, you have to use larger time frames. But you're going to have to be waiting around more. For purposes of this stream, that's why I use a 15-second time frame. So I can demonstrate this thing in action with signals. Otherwise, I'd be waiting 45 minutes and I'd still be in this trade, right? Whereas the 15-second, I'm in, I'm out, I took my profit, and I don't have to sit here and stare at this thing for hours. But that's, again, it's for purposes of the stream. All right, any questions, you guys? All right, so as a reminder, I will stream my stream on Mondays, where I do my analysis of Bitcoin and the other markets for the week, that kind of thing. I'll continue that, but I'm not going to stream next Wednesday. I'm not going to stream. I only have a couple of people watching me here, and this is, I showed a good trade. I need to build up my following in order to make these streams worthwhile for me. All right, so I'm not blaming YouTube. I'm not blaming anyone. I know what I have to do, and it takes a while. It's going to take me a while. So, but that's what I have to do, right? I have to cultivate the following somewhere else and then invite them to the stream to see these numbers grow, because YouTube is not going to help me grow these numbers. So I'm not going to stream next Wednesday. It doesn't matter if I stream or not. Right? I've been streaming for a few months. I still only have the same amount of people. There's no numbers increasing here. So again, as a reminder, I'm not going to stream next Wednesday. And in August, I may just take the whole month off as far as this stream. And then my Monday stream will be regular, will be normal. All right. So if you found value, I hope you enjoyed the stream. Press the like button, press subscribe, all that other stuff. Try the Trade Scanner Pro out. Also, if you want to try an Apex account, again, if you use my code MPM, it helps me out and it helps encourages me and tells me that I shouldn't take days off and that I should stream more. All right. So anyway, again, I'm going to wrap this up here because I don't see any questions. Guys, enjoy the rest of your day, the rest of the evening, wherever you are in the world. And thank you very much for watching.